Hey everyone, welcome back to Corporate Decoder, the place where we look at big company reports and try to figure out what's really going on. Today we're diving into NETGEAR's proxy statement. Don't let proxy statements scare you. Think of it as a behind the scenes look at who's running the show and how much they're getting paid, what's in store, a shake-up in the board, a new plan to pay employees, and some interesting insights into how NETGEAR sees its future. Let's get started. First things first, this document is a definitive proxy statement, meaning it's the final version sent to shareholders before a big vote. And NETGEAR wants your vote on some important stuff. Mark your calendars for May 29, 2025. That's when NETGEAR is holding its annual meeting. This year, it's all virtual, so you can attend from the comfort of your couch. Key items to vote on include electing directors and ratifying their accounting firm. Time for some boardroom changes. There will be 7 director nominees up for election. One key detail, current board member Thomas Wachter is stepping down after 11 years of service. Good job. But the other 7 are up for re-election. Let's peek at who these nominees are. We've got Charles C.J. Probert, the CEO, Sarah Boniface, Laura de Shravan-Gallay, Bradley Marino, Laura Orvidas, and Janice Roberts. Seems like a mix of experienced tech execs and board veterans, so it should be a capable group. It's always good to check the company's values, and NETGEAR's emphasis on professional integrity, zero tolerance policy for forced labor. They're trying to walk the walk of being a responsible company. They also care about data privacy, a big deal in today's world. Here, NETGEAR states we have determined that there were no related party transactions to disclose in 2024, meaning they didn't have any deals with their executives, directors, or major stockholders that could raise conflict of interest. This is exactly what you want to see. Time for the accountants. NETGEAR wants you to vote for keeping PricewaterhouseCoopers LLP as their independent accounting firm. They audited NETGEAR's books in 2024, and the board recommends sticking with them. No surprises here. Let's look at what NETGEAR paid PricewaterhouseCoopers PUC last year. Audit fees were around $2.6 million, and tax fees came in at about $686,000. Then all other fees just came in at $2,000. All of this was pre-approved by the audit committee. Here's your chance to weigh in on executive pay. It's a say-on-pay vote, but it's non-binding, meaning the board doesn't have to listen, but they usually do. We'll dive into the details of executive compensation later. NETGEAR wants your approval for a new equity incentive plan, which will let them hand out stock and other equity to employees. They're asking for permission to issue new shares to their employees. This could help with attracting and keeping talent. It's really important for them to stay competitive, so they need to offer attractive packages that are consistent with their pay-for-performance model. They really focus on how well they pay their employees and also the governance so that it's a good investment for everyone. They do this by looking at past grants, forecasted grant practices, and offsetting dilution with stock repurchase programs. They're showing a few numbers. One of them is burn rate. The burn rate in 2024 was almost 7%. In 2023 and 2022, it went 7%. They said the increased burn rate was caused by needing to incentivize their new hires. Looking at equity plan information, it shows there are about 188,000 outstanding stock options at an average price of $32.58 and almost 3 million shares, subject to outstanding full value equity awards, which are the restricted stock units. NETGEAR wants to amend their employee stock purchase plan. This plan lets employees buy company stock at a discount through payroll deductions. They want to add 1.5 million more shares to the plan. They explain that if their stockholders do not approve this proposal, they're likely to have a shortfall within the next 12 months based on current participation rates, which would basically force them to end or pause the employee stock plan. In the last year, the CEO bought 117.7 shares of the company at $12, while the fair market value was $15. I really believe this is a good thing because they're doing it in good faith. Let's see some charts about compensation. We get a letter from the Compensation and Talent Committee chair who says NETGEAR had their first year of multi-year transformation. They hired a new CEO, C.J. Probert, who has a new strategic approach. So they're very excited about their changes. Let's break down NETGEAR's compensation philosophy. There are 3 main elements, all of which are based on overall company performance as well as individual performances. Base salary. This is your standard paycheck exceeded annual incentive compensation, basically a bonus for hitting yearly goals. I'd said long-term incentive compensation equity awards. Their base salaries are pretty high, ranging from $515,000 and $50,000. They give annual incentive plans. All of these numbers mean someone was really hitting the target to give out these incentive payments. They all got large stock awards to match this. The key here is no one on the compensation committee is an employee of NETGEAR, so there's no direct conflict of interest. Here's who owns what. The Brandes Group is the largest stockholder with 13.6% of the company. BlackRock comes in second with 9%. NETGEAR says they know of no other business to be conducted at the meeting. It's just these items to vote on. So after digging through this proxy statement, what's the real story? NETGEAR is going through some big changes and they're trying to make sure their executives are on board. Their focus on performance-based pay makes sense, but it also comes with risk. It's something to watch. It feels like NETGEAR is at a crossroads and this proxy statement gives us a glimpse into the board's plans. But whether these plans will actually translate to profits is an open question. Make sure to leave a comment below. And that wraps up this episode of Corporate Decoder. What did you think? Leave a comment below. And don't forget to like and subscribe for more deep dives into the world of corporate filings.